Are you ready to try your hand at placing your very first stock trade? Then check out our free guide, 10 Steps to Choosing Your First Stock to Trade, the Ultimate Beginner's Guide. In this free download, you'll learn how to choose the right kinds of stocks and how to find them, know when to buy your stocks and when to sell them, and you'll learn how to take your very first steps to becoming a stock trader and much more. Grab your free guide now by going to TRADEway.com/guide. That's TRADEway.com/guide. Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing.
Hey guys, this is Ben Mitchell, and today I'm going to be your host, filling in for my dad, who's been out for a little while our grandmother has been going through some medical issues. I really appreciate everyone's prayers for her. It truly means a lot to our whole family. Now, it's a real honor for me to get to do this today, and I'm looking forward to sharing some info with y'all that I really care about, and I think you will too. Now, to preface today's topic, I wanted to give some background. So many of our listeners out there, you know at this point that TRADEway has been teaching our students how to trade in the stock and options markets for a long time now. But we've also been a leading educator in the precious metals industry for many years now as well. I've been the precious metals operations manager here at TRADEway for the past 7 years, and that brings me to the topic of this episode. When it comes to physical gold, and I'm talking coins, bars, rounds, and so on, economists out there might disparage it as nothing more than a relic. I've heard it so many times. And then investors that do buy it will often misapply their gold purchase. But is gold truly nothing more than a relic? And if you do cut through the noise and buy it anyway, how can it be properly applied? Well, let me start with giving you a premise that may help you first understand how and even why it should be applied in the first place, and then why gold actually has far more power in the 21st century than many want to give it credit for. Now, there's an economic theory that was put forth by economist Timur Kuran, who's the professor of economics and political science over at Duke University, and his theory is known as preference falsification. Now, I once heard him give a very simplified example of this particular theory, where he said that if you were invited to someone's house and you walk in and immediately you can see that their home decor isn't quite your style, but they ask, "What do you think of the decor?" You may very well falsify your preferences in order to, avoid an awkward situation, keep from hurting your host's feelings. So you say, "I think it's great." And by doing so, you've now falsified your own preferences, your own taste for that specific situation. Now, this idea can be extrapolated out into a lot of fields. In fact, analysts have actually attributed the last 2 presidential elections and the vast disparity in the polling versus the actual results because so many people were outwardly withholding their internal political preferences in order to maybe avoid some potential confrontation or something like that. And when you start applying this theory to economics, the idea that people's actual preferences are falsified on the outside, it gets really, really interesting. Now, what I want to do here in order to start giving us an idea as to why we should be learning how to apply physical gold the right way is I want to apply this theory to our monetary preferences and see how those preferences may have been involuntarily, let me say that again, involuntarily falsified over 5 decades ago. Okay, so let's break this down a little bit. Involuntary falsification of monetary preferences. It's involuntary because unlike the 2 examples I gave before, where the preference falsification was voluntary in order to accomplish a certain goal, I believe that in the case of our money, it is involuntary. So we've now involuntarily falsified something. What have we falsified? Our very own monetary preferences or our money preferences. And here's what I mean by that. There was a time in the U.S. where from 1879 to 1971, depending on how you want to look at the time frame, in some form or fashion, our money was tied or pegged to gold. Now, it goes without saying, but obviously that made our money very strong. Now, in 1971, when this changed, U.S. citizens were told that by cutting the dollar from gold, therefore creating what's known as a fiat currency, in other words, it's paper or digital money that is not tied to anything, we were told that this would empower the men and women of the Fed, increase the general prosperity of the American people, that it would provide protection against future recessions, which is kind of hilarious, and produce high employment and sustained economic growth. And what I'm getting at here is that the American people were sold on fiat currency being the better option. They trusted their government based on what they were being told explicitly from the Oval Office, and they were then convinced that this option was better than, let's say, a gold standard of any kind, really. However, from the moment this happened, our money, our savings, it's carried an inflationary bias ever since, which has totally altered our perception of value and has made it almost impossible to get our bearings for where our money's value is. And while some of what the people were told at that time was true, many of those promises were broken, yet we were already convinced. Now, I believe our monetary preferences, in other words, having a fiat currency over a gold standard, were involuntarily falsified at that time, and they have been for the majority of people ever since. Now, you might be thinking, Ben, come on, how do you know what my preferences are here? And obviously, I am generalizing a little bit, but here's what I believe, and that is for the majority of people, a fiat money system is not preferable to a gold standard system or just gold in its own right. Now, going back a couple centuries, anthropologists, archaeologists, historians, they started compiling what they found to be the needed properties of money in order for a civilization's economy to thrive. They determined that money needed to be accepted by everyone, fungible, durable, portable, it needed to be uniform, it needed to be limited in supply, with emphasis on that one, and divisible. Now, our fiat money is missing at least two of those, and while the perception is that it seems to be working out just fine, we've been on a relatively short, if you think about it, a relatively short 50-year experiment that has actually not gone too well for fiat money. So now you think, well, Ben, how do you know that? And there are plenty of metrics out there that validate that particular idea. But for starters, the US dollar, and I'm not making this number up, has lost 619%. It sounds ridiculous, but it's true. It has lost 619% of its purchasing power since 1971, when Nixon closed the gold window. And that's according to CPI data. That's why I think our monetary preferences have been involuntarily falsified. Now, don't get me wrong here. It's certainly not lost on me that fiat money is ideal for exponential growth on the largest possible scale. Governments can spur international growth. They can fund wars when needed. They can flood the economy with capital to get out of recessions. You know, all of these crazy things that we hear about that our government is capable of now that we're on a fiat money system and have been. These are all things that I guess you can argue are good things, at least in the short-term time frame. But here's the problem with fiat currency. It is detrimental to the individual, to the person that saves their money, to the person that's living on a fixed income or whose wages are being outpaced by inflation, which, by the way, has recently been a wide-scale problem for a lot of people. All of a sudden, that inflationary bias, which, as we know here in early 2022, can be severe at times, becomes a big problem for the everyday citizen, hoping to leave a sustainable inheritance to the next generation someday. So, while I believe our monetary preferences have been falsified and that fiat money is not preferable to real money like gold, for example, there is something we can do about it on an individual basis at least, which is what I'm going to be getting to here in just a second. Now, in a very abbreviated version, we just talked a little bit about why, from a fundamental perspective, gold needs to be applied the right way. We need it. Our fiat money isn't cutting it. We've lost a devastating amount of our purchasing power, not only in the long term, but even just in the last 12-month period from March 2021 to March 2022. So now we need to address the idea that many economists and many central bankers adhere to, which is that gold is nothing more than a relic. But of course, we have to ask, is it really nothing more than a relic? Well, in reality, gold carries a lot of power in the 21st century. And oddly enough, we just witnessed what that can look like in the past few weeks, right in the middle of the devastating Russian-Korean War. Now, I think many of us are familiar that in response to the Russian invasion in February of 2022, the NATO allies started imposing sanctions on Russia with the aim of cutting them off from needed finances. Now, initially, this resulted in the Russian fiat currency, the ruble, crashing substantially. In fact, it was so substantial that many analysts believed that Russia was on the brink of a total currency collapse, which obviously would have devastated Russia's goals. Of course, that's what we all wanted to happen. The thing is, what many people forgot was that Russia, and China as well, by the way, has been stockpiling gold at a generally rapid rate for decades. And they used this to literally save their currency. Now, let's kind of look at the timeline here for a second. So on March 25th, 2022, Russia's central bank pegged or tied the ruble to gold at 5,000 rubles to 1 gram of gold. Now, this immediately started to lift the ruble's value. Now, in addition to other policy shifts, the ruble would quickly become stronger. Get this, stronger than it was pre-invasion. Think about that for a second. Why is that the case? It's because the perception of the value of the ruble, a fiat currency, suddenly changed when they instituted this variation of a gold standard, if you will. So the power of gold saved an otherwise doomed currency. Now, what's even crazier is that on April 7th, 2022, the Kremlin ended up abandoning that new policy, which pegged the ruble to gold altogether, because they saw that the policy wasn't even needed anymore to keep their currency afloat. All it took was pegging the currency to gold for a little over a week, and their currency was stabilized to the point where it was stronger than it was before the war even started. So because of that stabilization, and because NATO's sanctions didn't account for the massive amount of gold that Russia had been stockpiling, all of the imposed sanctions and their impact were shortly irrelevant, as if they hadn't even happened, at least in the context of the currency. Just think about that for a second. It's absolutely nuts. What should have been another Weimar Republic like after World War I, when Germany experienced hyperinflation because of the mess they created, rather than that happening again, it turned into a stronger monetary power. Russia turned into a stronger monetary power simply because of the leverage that gold provides. And as much as we hate that our enemy was able to recover from intended harm to their finances, to their economy, what we are left with here is a potent reminder of how powerful gold can be to this day. And the most important lesson we can take from that very bizarre, very strange example is how we, on an individual basis, can do the same. We can leverage gold as well for our family's sake. If we ever find ourselves in a position where, our fiat money just isn't a viable option anymore, whether or not our central bank ever pegs our currency to gold again, which I don't see happening personally, we can still leverage ourselves against loose monetary policies, which, of course, has been the case for so long at this point. Now, we can do that through an asset that was put here for us as the purest form of money ever by the Lord himself. It's really an incredible thing. And if you look at the context of the, quote, price of gold in fiat currencies or fiat money like the US dollar, that, quote, price is now totally arbitrary. Because if the ruble, for example, had collapsed, the Russian citizens, many of whom are sickened to be in the situation they're in, by the way, they would need something that transcends their currency to fall back on, and that can be gold. And the same can be true for us as well. For the same reason that gold can be, and it has been, a great, reset button, if you will, for civilizations in the past and even in the present, as we now know, it can be the same for us. It can help us offset that involuntary falsification of monetary preferences that we talked about earlier. Too many people out there misapply their metals purchases and treat them like any other investment or trading tool, but it's just not. Gold is a resource. It's a form of money by which our very livelihood may eventually depend. And here at TRADEway, we want to show you guys exactly how to apply your gold and your silver investments to your life and to your portfolio the right way. And if you guys want to learn more about how we can do that, how we can help you do that, just reach out anytime by emailing support@tradeway.com. And I'm more than happy to personally address your questions and your goals. Thank you guys so much for listening today. This has been The Word on Investing. And until next time, y'all be blessed and happy trading.